Hi, this is Chris Buss with Traders Profit Compass with your Market on Close report for Monday, November 9th. Okay, what I want to do is run through our normal routine here and go through the indexes, go through the FANG names, and then talk about the day in general and kind of how we want to think about what happened today and kind of how we want to be getting positioned for what may be coming down the road. So let's get started. We talked about at the midday market pulse that I was shooting for the gap that had formed at 360. Now, it looks like that was a simple trade, but it turns out I got stopped out in here on this candle and then ended up re-entering on the figure out how to say this. On the break back below 360, I got short, which worked. And then at the end of the day, I rolled down to what I rolled down to. I rolled down to 354 at the end of the day, and looking for a gap fill in the days ahead. Now we're at this prior high, so that may be a bounce point. That's why I wanted to take the gains off of this initial trade, take that to the bank. If we get a bounce tomorrow, there may be some consolidation here, but I think this will close eventually. At least that's the trading plan. If we get much of a bounce tomorrow, I'll just close out and then reinitiate if this breaks down below. Let's look at the 30-minute chart. This was the area here where I got stopped, but then re-entered the trade on this break back down below. So nothing's ever easy, and you could say, and I was saying to myself, why didn't you just stay in it? But that's what stops are for. If you don't, this could have gone, back up towards the highs. So, got stopped out for a bit of a loss there and then re-entered and then made it back when the trade eventually worked. And you can see here the balance of the gap with the prior highs right in this area. Qs. This was a trade we talked about at the midday as well. Got short. I did take it off in here and then put it back on. Again, hindsight, I took some profits here and then reinitiated it on this break here below. And this one I closed out at the end of the day with no holdover because I felt that there would be a good chance that this may hold here at this 287.5. And if we look at the 30-minute chart, this 287 would fill this gap, and there's a fair degree of, you got this large volume over price bar here. So I felt that the chances of this just blowing through, while certainly possible, if that happens tomorrow, I will get short against 287.5 and then look for a move down here to 283.50, which is another high volume over price bar level of support. So all in all, that idea of people getting out of tech and repositioning towards the cyclicals ended up working. But aside from the narrative or whatever, this was all about trading the levels. And once, this 293, 292.5 level went, then everything went pretty quick after that. IWM. At the midday market pulse, we talked about this entry into the gap, and it made several tries to get above, but didn't hold. So I rolled down from my 172.50s down to 169 for Friday, and looking for this to make inroads into this gap in the days ahead. And I've got to stop somewhere up here, 171, something like that. But there's no trades in this area. There's no technical support at all. So I'm hoping that there's some follow through on IWM to the downside, and you can see it here. There was a kickback. That was a second bite at the apple. If you had missed this and you got that kickback up to 173, where progress was stopped, that would have been a nice short entry for anybody that didn't get in back here, and that turned out to be a real nice trade. Now, looking at this, we've got an uptrend channel from before, and we've got, if I were to extend this trend line out, there may be some support in here around 168 or so. So we'll have to watch that for tomorrow. Tomorrow, most likely that will be hit, and there'll either be a bounce or it'll cut right through and come down towards more of a gap fill. Running through FANG, there was some decent trading ops here today. This was definitely an opportunity to get short at 285. You got a fast $5 out of that on the break of this level, this well-defined level here at 285. By all accounts, it should have bounced there, and it didn't. It cut right through. So on that break was a short entry on the break of support, and you got right down here to the top of this gap, which I've got marked in. Now we've got this uptrend line that's coming in from back here, and we've also got the bottom of this trading range at about 275. So that will be a very key spot tomorrow. If you had gotten short and if you held over, you're holding overnight, tomorrow this will be a key spot, this 275. And if you're not short tomorrow, if 275 were to break, then I think you come down here and fill this gap down to 266. So that would certainly be a worthwhile try tomorrow if 275 were to fail. Apple had been holding this 120, and once it failed, boom, got a fast move down to this gap where it found support where it did the other day, right down here at 116. I think the key level tomorrow is going to be this 115, and if it can't hold 115, then you've got to be on the short side, because that was a key level that we have been looking at forever. And below 115, to my eye, price is going to be on the wrong side of the chart, and back down into the low teens area. This would be a place where I would expect some type of a bounce to whatever degree here tomorrow at 115. But if that doesn't hold, then I think that's a place to anchor short. And if tomorrow there's a bounce right out of the gate, 118 is your key spot. If it were to reclaim that, I think you can go long. But I think the tide may have turned on big cap tech. And I think if today's action holds true to form going forward, we're going to be in a fade the rip mode, not buy the dip. So there's a lot of air down below on a lot of these charts. We've got gaps on this surge off of the low, and now we're coming back to maybe do some repair work on these gaps. Tesla, man, if you were on your game and laser focused on Tesla, what an opportunity to get short on this break back below 450, straight down for 30 bucks. No shakeout candles, no, all the things that markets do to get you out of your position. Just absolutely none of that. It was straight down the whole way. And congratulations to you if you had got in that trade really at any point along the way. Even here at 430, that was a level that it should have held, but it didn't. So even getting in here at 430 at the end of the day, you got a fast $10 out of that. Now, going forward, got to hold 420. That is our line in the sand to be either on the right side of the chart or the wrong side of the chart. And if it loses 420, you're going to get a fast move down to 410. And there's a gap here that I don't have marked in. But below 410, who knows where this might go, but back down towards the lows is what I would think over time. So tomorrow, any kickback to 430, you can try and fade. Any break below 420 is a get short moment, I would think. Microsoft fell apart on this break back below 121.50 was your signal to get short, and you got $3 out of it so far, with a little room to go to fill this gap. And like so many of the other charts that we've just looked at, really needs to hold this 216 area, or else it's coming back to 213 and possibly 209 down here at the bottom with this gap fill here. Amazon, wow. We had talked about this at halftime. A lot of travel today, but picking it up near the noon hour when it made this push to 32.50 and got rejected there, even had another chance right here. Those, that would have been a place to try a short with a stop just above, and then it let go, and you got, basically a $100 move from 32.50 or thereabouts down to 31.50. And notice this big gap here from let's just call it 31.50 down to 30.50. You've got $90 or $100 there of gap to fill. So that would be an area tomorrow. 31.50 is either a go or no go, and I think any kickback to 3,200 that gets rejected would be a great place to try a short. Google, we had talked about walking along this 1780 and lost it at the end of the day, back to close at 1760. I would expect this to come back to 1740, and that will be your test. Remember, break out of a trading range and then back in. Your target is the bottom of the box. So your target there is 1740, and that has to hold, or we're back to 1700 and a potential gap fill if things fall apart, back to 1650. Netflix, again, one that we talked about at halftime, a reach back up to 494, couldn't make it, and then your break back below this gap level here at 487.50, and then it just went down from there. So kudos to you if you grabbed that one. That was a very nice short entry. TAN, bad bearish engulfing candle here, had broken out and then came back to close red. So this may come back to 67.50 here, based on that bearish engulfing candle, and move back down into this well-defined trading range. MJ, big gap up on the open and gave most of it back. Unfortunately, we're along that item, or along that stock. That was disappointing to see, but the upward travel on the stock is still intact. We got killed on Snap, back in the trading range. Still hanging on to this 8-day, maybe a little bit below. Probably going to get a move back to 40. I mean, if you closed it, that's fine. I elected to just keep it open, more or less in hope mode now, with our 45 calls for December. So there's time to recover, but definitely not the day that we were looking for. Ditto with Yeti, got killed. We were up here and then closed down below. Keys did fine. It was off the highs, but still had a positive day. This Bitcoin was a good bounce trade today. For those of you that listen to the Market Pulse, got a nice bounce off of 16. We were down 8% and closed down less than 3. So we got a 5% bounce there. That was a nice bounce trade. I'm not going to show gold. It was down, $90. Got killed on that. So let's talk about today. I think today was all about repositioning for people that had piled. We've done 2 back and forths at least on this value cyclical trade. It was all on, then it was on before the election. After the election, it was everybody piling back into growth, and now they doubled back and reversed again to the cyclical growth names based on the COVID vaccine information that came out today from Pfizer. Okay, I want to watch this trade real close. I mean, energy, refiners, banks, hotels, travel, what else? Cruise ships, all that stuff that's been beaten down. I don't think that they're going to just gap and go. I think there's going to be a pullback that we can buy at some point. I think today was a hard day to, jettison everything and then go chase names that were up, 15, 20, 30, 40%. There's going to be a pullback there. And what I want to do is find a solid fib retracement zone or a level that we can shoot against to get long against a line in the sand. I don't like to take trades where there's nothing to shoot against, because then you're at the mercy of a candle. And I think there'll be some profit taking in the names for people that were, positioned well going into it. I think they're going to find it difficult to just, sit on a 25% gain and not take some profits. So I'm going to be scouting charts, and I haven't done it yet, and I encourage you to do it as well. Look for good technical setups that you can enter at a specific level and then, have a line to shoot against, like I always say, to where if you're excuse me, if you're wrong, you get a paper cut, and if you're right, you're off to the races. I really would guard against trying to, pile in these names after this one-day move, because let's face it, good news, everybody looks forward to a vaccine, but it's going to be a long road. And the President-elect Biden was talking about, the long dark winter. COVID cases are still going through the roof, and you're starting to see different elements of partial lockdowns in a variety of states, talking about dining and gatherings and that kind of thing. So I don't think it's balls to the wall from here on out. I think energy may have seen a durable bottom, and I'm looking for a little pullback there. I really like energy, versus, some travel stock. I think energy got beaten down, and we may have seen a low there. And if travel and all this stuff comes back, you're going to see it in demand in oil, and whether it's the refiners or the exploration companies, or even oil itself, if that demand picks up with the reopening trade, I think that may be the safest long of the cyclicals that there are, just from the fact that they got beaten down so much, left for dead. Now there's some mini breakouts going on, and I think we'll have time. If oil can clear, I don't have the chart handy and I haven't looked at it lately, but if oil can clear like 41, 42, it may be off to the races towards the high 40s and possibly even the low 50s if things really pick up. I think that might be a nice trade to take a close look at in the days ahead. So I think the watchword right now is patience. Let's let some of these trades come to us, and there may be a trade in short mega cap tech and long cyclicals, because if the rotation is durable, I think you'll see money continue to come out of some of these tech names, And like we said before, there could be raging bull markets under the surface in these smaller groups where you see SPY and QQQ come down while these cyclical and value names rip under the surface, because they're not going to be able to move the needle at the index level. So now I think it's going to migrate towards good stock picking versus, riding the indexes higher on the back of the mega cap names. If they come off, there's just no way on a market cap basis that the indexes are going to be able to make steady advances with those big mega cap names coming off. So let's leave it there. I'm going to be doing some hunting, like I said, trying to find some good setups that we can take advantage of going forward. And by all means, if you find any, please pass them along and I'll share them with the group. I know we got some good chartists out there, so pass along the names that you find that with good setups, and we can all take advantage of it. If you're new to the channel and like what you've heard, please subscribe. That would be great. Hit the alarm bell and you'll get notified of all new content coming your way. And also over in the show notes are links to the blog site and also how to register for my content, where you'll get an email each and every time I publish information to keep you abreast of markets and what I'm seeing, along with plenty of trade ideas. I think some of the ones that were pointed out today were they worked out great. So I'd like you to be able to take advantage of those going forward. So, and you'll also get an email invite to our trading room, where you'll find a lot of sharp traders, where you can expand your trading network and get a lot of new ideas to put into your trade machine. So let's leave it there. I really appreciate your time today. Appreciate you being with me, and we'll see what we can find out going forward. This has been Chris Buss with Traders Profit Compass. Talk to you next time.